Hi, welcome to the Market Alert for Friday, the 14th of August 2015. Starting off in the 5-minute chart, you can see that the market was sideways and then dropped before the start of the official 2:30 p.m. session. There you can see professional buying coming in and then trading down to the 17,350 level. Now, in yesterday's Market Alert, I said that the market is likely to move higher following the test that we had on Wednesday, which is this big bar here in the daily chart. And this was companies buying their own stocks through the trading desk of Goldman Sachs. So that says how bad things have become in the stock market when companies are buying their own stock to keep the valuations at the ridiculous levels of 18 times earnings, I should say. So that's the reason behind this. So this up move is going to be fairly short-lived unless there is a surprise interest rate rise by the Federal Reserve. And I say surprise because obviously what's going on in China with the yuan, there's been some more devaluation on the overnight session as well. So very small. But even so, it's a case that the US have been painted into a corner, and there is a likelihood that they may just come out at some point without it being an official meeting or announcement. So again, I'm just throwing that one in there just in case they decide to do it, because you can't predict what the Federal Reserve are going to do anymore. And in particular during the last 7 years with the QE that they've used to try and stimulate the market, which has made no difference whatsoever. Everything is massaged, contrived, and blatant manipulation of stock prices and economic data as well. Again, I'm just throwing that one in there just in case you see a big move and wonder what it is. They may do it, but the Chinese have certainly painted them into a corner with the devaluation of the yuan this week. This has increased the value of the dollar. They can't increase interest rates theoretically because this will increase the rate of the US dollar as well. But that said, they keep barking on about they need to normalize the market. And what they mean by that is they want to create a normal picture of the economy. And this is, prior to 2008, that's when there was a free market, a market that wasn't as manipulated it has been for the last 7 years, where the market in the end had the last word and prices found a fair value. But of course that's not been the case for the last 7 years. It's just been one direction for stocks and all the other asset bubbles alike. So you never know what they're going to do. It would be the wrong thing to do, that's a certain fact, but there's still talk of rate rises and possibly two. I personally do not believe it. I think that they would go for another QE. The GDP figures out yesterday, the advanced ones, are showing lower for the third quarter, and any excuse to print more money and keep the illusion alive would be my choice. But I'm saying just be warned, you just never know what Yellen and co are going to do. So yesterday, obviously based upon the corporate buying of shares of their own stock, on Wednesday the market to move higher, and I did warn if you get any sell signals they would be short-lived and barely make the target price. Well, this one made the target price, and you can see how the market then moved higher. Once the market had exhausted itself into the late session, again you see this triple X just getting to the target price, the PTI getting to the target price, and then we get a bit of profit taking because, as I say, the background really is weakness, but they're going to do anything in their powers to move this market back up to the highs to make it look as if there is some sort of sustained recovery. But personally I'm not buying it. So there were profits yesterday, you can see in the first trade of the day. The long side was the best side yesterday. See the market moving higher. They were just up to the next psychological level from the PTI. It takes you through there, but then the market starts to come back. So up to the psychological level, 33 points. There was 20 points on this, but you'd have to have been fast. And like I say, I did warn about the short side not being the good side yesterday, except for the close of trade, of course, where profits are taken by those who are still really bearish. And again, the corporate buying of shares is not a broader market buying of shares or the general public or pension funds and the like. It is purely and simply corporations buying their own shares to keep the values higher. So later on in the session, you see a few more signals there. Each one was a winning trade, of course, but personally, I prefer just the morning session. And again, just like Wednesday, the Thursday session, you can see the market continuing to move higher throughout the what would be deemed as the quieter period there. So in the daily chart, you can see some buying for yesterday, but the market not making much progress. The prices are sideways today, but it's going to take news to move the market. And let's see if we have any prelim consumer sentiment. This is forecast to be slightly higher. We'll use this to move the market higher should it come out higher than forecast there. And finally, on the implied volatility, 1294. Very interesting picture developing here. It might look like two lines on the chart to you, but something I noticed this morning that I have never seen in, gosh, I don't know, 1994, 21 years of looking at implied volatility. Both of these lines are actually coming together, which I've never seen such a sideways range of both of the historic and the implied volatility. So what this means, my sort of gut feeling would be that we are due for some sort of major volatility in the market, and I suspect it's likely to be to the downside following any recent or any up move from this point. But very interesting picture developing there. Not seen this before at all, where we've had such a sideways move, given that the underlying market has lost over 1,000 points as well in the last few weeks. So it's a very strange thing that's developing there. So it's one of those that I've never seen before. I have to watch how it unfolds, but I suspect we're going to see this sort of very high volatility when things do start to get underway, falling apart. And I would think, again, once everybody's back after the vacations and everything returns back to normal from sort of September onwards. Right, that's it from me for this morning. I'll see you in Monday's edition of the Market Alert. Have a great weekend, and as ever, thanks for your support and also for watching. See you in the next one.